What I'd like to do is formally introduce those two speakers for us. Natalie Spiwak is the founder and the president of Affinity Trust. She's been educating the community about the importance of protecting and transferring their wealth quickly, privately, and cost effectively for almost 15 years. Affinity Trust proudly serves the estate planning needs of Kinecta members, providing accessible educational seminars and delivering affordable estate planning documents such as living wills, or living trusts, wills, power of attorney, and healthcare directives. They're prepared by experienced attorneys, and it then is sent to their members. Natalie is also a paralegal with Citadel Law Corporation and Legacy Planning Group. She's also a California notary public. Affinity Trust aligns with attorneys at Legacy Planning Group to deliver exceptional legal services to Kinecta credit unions. Legacy Planning Group is led by an attorney, Jeff Wegg. Jeff is our other speaker this afternoon. He specializes in tax and estate planning. Mr. Wegg earned his JD at USC. Well, he served on the Southern California Law Review and received his LLM in taxation at Loyola Law School and graduated with distinction. So with that, I'd like to turn it over to our speakers. Natalie, I believe you're starting for us. Thank you again, everyone, for joining.
Thank you so much, Paul, for that wonderful introduction and for having us here this evening. And thanks to each and every one of you who is joining us to learn a little bit more about business operations. What are we going to be speaking about today? Jeff and I are going to cover bookkeeping and payroll, kind of the nuts and bolts of operating your business. Also very important topic is accounting, tax returns and annual reports that need to be filed, employee benefits and wages, compliance, licensing, and regulations, both at state and federal levels, insurance. What types of insurance should you have as a business owner? And finally, we're going to end with legal forms and legal agreements. So lots to cover here. I know we don't have a lot of time, but we're going to try to get through as much as we can. And of course, as Paul mentioned, we really do want to spend some time on your questions during our Q&A session. So please do jot those down so that we can go through them together. So Jeff, I'm going to invite you here to speak a little bit about bookkeeping and what is bookkeeping and how is this done and why is it important for business owners?
Sure. Thank you, Natalie. So bookkeeping is at the most very basic level, just a record keeping of the financial transactions of your business. For most small businesses, what are you spending money on and what kind of revenue are you bringing in? Now, the important part of bookkeeping is an important part of your business in the bigger picture because it lays the groundwork, the preparation of other documents, such as year-end income statements and your tax returns. So bookkeeping is really an essential part of any ongoing business. So what does your bookkeeper need? A lot of our clients who run a small business, they might be their own bookkeeper, they might have someone else in-house, or they might hire someone else to do it. But what they're going to need are access to all your records of your transactions. Very common approach these days is just to give your bookkeeper access to your business bank accounts. And it's as simple as that. These days, everything is electronic and online for the most part. They can access those records on a weekly or monthly basis and very easily put together those records that the bookkeeper needs.
Thank you, Jeff. And payroll. So what is payroll? Of course, once you have employees or independent contractors, you're going to have to pay them. So you're going to have to gather a list of all your employees and other team members. And what are you going to pay them? That's going to be determined by various factors, such as minimum wage requirements. What benefits are you going to offer to your employees? So payroll is really the process of providing salary and benefits to your employees and independent contractors. And I think it's really important to know the difference between an employee and an independent contractor, for tax purposes and other reasons. So I do want to spend some time here. And Jeff, maybe you can elaborate on the difference between an employee and an independent contractor.
Sure. And this slide is so important. In California, the current test to decide if someone's an independent contractor or an employee is called the ABC test. This is really creative. It's a 3-part test, so let's call it ABC. This was put into effect in 2020 through legislation at the state level. And here's the basic rules. There are 3 parts to this. First, is the worker free from the control and direction of the business? Okay. And this is in connection with the performance of their work. Okay. So generally, are they being hired sort of outside the locale and doing work outside of the business itself? The worker performs work that is outside the usual course of the hiring entity's business. Again, outside the location, particularly geographic. And the worker is customarily engaged in an independently established trade, occupation, or business of the same nature as that involved in the work performed. This means the worker is engaged in something that they typically do. This is not a special project that they're being hired for. This is their typical line of work. The answer is yes to all 3 of these. Then the worker is an independent contractor. Okay. That means each one of these has to be met. If either one of these answers is no, then the worker is an employee. All right. So again, free from direction and control, performing work outside the usual course of the hiring entity's business. And then the worker is customarily engaged in the same type of work. So this is actually, in practice, a very difficult test to meet. And in practice, this has resulted in a lot of independent contractors being classified as employees of the business.
Thank you, Jeff. And maybe I can illustrate this by using an example. I know in part 1, we used the world famous cookie company as our business entity. So let's just say that this cookie company hired a local baker to bake cookies for their weekly farmers market.
Right.
Well, the baker worked from home. They set their own hours. She used her own tools and equipment. Well, the baker signed an independent contractor agreement to establish that she was an independent contractor. Well, it just so happens the baker fell one day while making her cookies and requested paid sick leave, but the company denied it due to the independent contractor agreement. So she spoke with an attorney friend of hers, Jeff, and she found out that she's actually an employee of the company. So she was entitled to all sorts of benefits, including paid sick leave. So I guess in this situation, Jeff, would the independent contractor agreement be void under California law?
It would.
Okay.
If you notice, under the ABC test, the existence of the independent contractor agreement is not a factor.
Mhm.
So let's look at these 3 factors again. Which one got this independent contractor caught up in the rule as an employee? So let's think about this for a minute. She was free from the direction and control of the company, right? She was working at home using her own tools. This was work that she normally engaged in. She was a chef, so to speak. Okay. But she was doing work that the business itself normally does. Okay. A cookie company is going to hire people to help bake cookies. So just because they're baking cookies outside of the business doesn't mean they're an independent contractor. They're still an employee. So that's the factor that got the cookie company caught up there. I mean, as you pointed out, now she's an employee. The employer or the business is now on the hook for covering the cost of her injuries because these were suffered in her place of work. This is a really, really important test and something that's really critical for particularly small businesses to be aware of. You might not realize these rules override an independent contractor agreement.
Mm-hmm. Thank you, Jeff. And I think that illustrates the point of the importance of being given the proper advice as well by, an attorney or someone else who's well versed in these rules and regulations. So going on with payroll. So Jeff, do you want to go through the minimum wage requirements on a federal, state, county, and sometimes even city level?
Absolutely, be happy to. Now, just to be clear, minimum wage applies to employees or independent contractors. All right, so employee versus independent contractor rules will have an impact on some other stuff that we'll get to shortly. Minimum wage applies to anyone whom you're paying to do work. Okay, so the interesting thing I always find is that there are minimum wage requirements at various levels of government. Obviously, at the federal level covers all of us, but you might notice that's the lowest level. So anyone anywhere in the United States gets hired and paid to do work, they've got to get paid at least $7.25 an hour. California at the state level is significantly higher, more than double at $15.50 an hour. There's some additional overtime rules that we've noted in there. The important point is now California being double the federal level, any worker you hire, independent contractor or employee, must be paid at least $15.50 per hour. Okay. Now for employers, it gets even more interesting. There are both even higher minimum wage requirements at both the county and city level here in Los Angeles. In fact, the county is slightly higher than the city, but in both cases, minimum wage in the city and county of Los Angeles is up close to $17 an hour minimum wage for anyone that you've hired, employee or independent contractor, to perform work on your behalf. Again, there are some additional rules on overtime, but I think it's really interesting to note how much higher those pay levels are here in California, particularly in Southern California, versus the federal rate. And again, something that most employers should be aware of. It's going to obviously impact your bottom line.
Thank you, Jeff. And I do believe that payroll is the legal responsibility of the employer. So you also want to make sure that you budget properly to make sure that you could accommodate the payroll costs, and that could impact your product pricing. So it's also really important to have a bookkeeper who can keep track of all of your expenses and just make sure that you can make payroll.
That's an excellent point. Yep, great.
Because I know there's a lot of costs involved in running a business, but payroll is so important. Now we're going to move on to accounting, tax returns, and annual reports. So what really is accounting? Well, accounting is defined as measuring the results of a business economic activity. So it's the keeping and preparation of the financial records of transactions of a business, the analysis, verification, and reporting of such records. So practitioners of this process are referred to as accountants. And accounting and financial reporting are often synonymous with one another. And Jeff, maybe you can speak to the difference between a CPA and an accountant.
Sure. So, and this is actually a really important distinction, and I'll talk about how this can affect your business's bottom line. An accountant is someone who has earned a degree, typically a bachelor's level degree, a college degree in accounting. And I can tell you from experience, that's a lot of accounting classes. So this is a person who's going to be very, very knowledgeable about finance, bookkeeping, taxes, and the things of that nature. So they've got a lengthy period of education, and they will be a specialist in accounting. So what's the difference between that and a CPA? A certified public accountant, we typically refer to as a CPA, has additional training, and there is a formal state certification. The CPA exam is a very lengthy, very detailed, very demanding certification test in order to get that label of CPA. CPAs will typically command higher payments, a higher hourly wage or hourly rate, and they will typically be considered more experienced or at a higher level of training than an accountant. despite the accountant having a great deal of experience and knowledge, a CPA is generally considered perhaps a step above just the accountant. So just sort of think about it this way, all CPAs are accountants. You become an accountant first, but not all accountants are CPAs. The CPA, again, is going to be a little more elite. So do you need an accountant or the CPA? That's really going to depend on the complexity of your business and the size of your business. The more size, the more complexity you have, the more likely you're going to look for and need a CPA versus an accountant. Not always the case, but I think that gives you the general idea of the difference.
And Jeff, now we're moving on to tax returns, the federal, state, and local level and what the requirements are. So maybe you could touch on just a brief overview of the required tax returns and filing dates.
Sure. So, and again, I think, just remember, everyone, we're talking about business operations. These are really critical things to keep in mind on an annual basis as you're running your business. What are the things I need to remember? We all know, or most of us know, April 15th, right? Oh, I've got to get my returns ready. I'm going to call my accountant. They're going to be mad that I didn't call them sooner, and everything's being rushed. Well, your business is going to have a whole set of tax returns for the business. Okay. So if we start with the personal, you've got your 1040, your famous individual income tax return at the federal level. At the state level, by the way, in California, it's called a 540, sort of the junior version, if you will. And it's due April 15th. And if you take your extension, it's October 15th. Okay. Now, corporations will file a separate tax return. The federal level, it's called the Form 1120, a corporate federal income tax return. At the state level, it's a Form 100. What's the main difference? They're due a month earlier. Okay, corporations have to file by March 15th. You can get an extension and file on September 15th. Quite common to get an extension in the corporate world. Limited liability companies and partnerships must also file tax returns. Identical filing deadlines, March 15, September 15 with extension. The form numbers a little bit different, 1065, 565. But the same idea. They do need to prepare, and that will be for the prior year. Just to keep in mind, everyone, there might also be local income tax returns. There could be property tax filings. And I think now you begin to get a sense of why it is so important to have an experienced accountant who knows how to take care of your business return requirements.
And Jeff, and I know you're a tax planning attorney as well. And when would a tax planning attorney become necessary, and how could you help a business?
Sure. So just about any business could probably use some tax planning to help with their tax liability. Even for the smallest businesses, for example, you might be running your business as what we call a sole proprietorship, where all the income is just going to go right into your personal return. You might benefit from forming a limited liability company or corporation. You might get the ability to take more business deductions, for example, on your expenses. If you've got employees, it's almost certainly a benefit to be in the form of a corporation or an LLC than a sole proprietorship for liability reasons, for example. If your income reaches a certain level, probably the general range is $500,000, $600,000, $700,000. You should absolutely have an experienced business accountant, and you may want to find a business tax planning attorney, at least for a consultation, and find out if there's opportunities to save money on your taxes.
Thank you so much, Jeff, for that. And if the attendees here missed our first session, it was about entity formation. And I know Jeff and I went into quite a bit of detail on the types of entities that can be formed. So I believe that recording is available. You can contact Kinecta Wealth Management for that recording. So now on to some of our reports, Jeff. Very common is a balance sheet, a P&L statement or profit and loss statement, and also a statement of information. And of course, these reports are important for various reasons, sometimes even getting certain types of insurance coverage. So Jeff, can you speak a little bit to, these reports and what they each mean and what they accomplish and why they're important?
Absolutely. So thank you, Natalie, for the introduction. These are typically year-end reports that your accountant will prepare for you. They're going to be important for a number of reasons. Preparing your tax returns. These are going to be critical. These lay the foundation for the year-end sort of snapshot that the tax return will rely on to report your income for the year. If the business has any interest in borrowing money, taking out loans to help expand the business, or pay for additional equipment or supplies or inventory, the lender is going to look for a balance sheet and that profit and loss statement, often called an income statement. Okay. Now, the state also requires that statement of information that we'll get to at the end there. That is legally required. These other two documents, the P&L and the balance sheet, are not legally required, but as a practical matter, every business needs one for your tax returns, for loans and things of that nature. So let's start with the profit and loss or income statement, what we call the P&L, okay? This is simply the most simple way to think about this, trying to figure out what's our profits for the year. And profits, of course, is our revenue or our income less our expenses. So let's take a quick look. So we've got, and if we look in the far right column, Natalie, we've got our year to date. YTD is year to date. And then if we go down the left-hand side, so what's our revenue? Our total revenue for the year was $800,308. Okay, that sounds great. Sounds like a nice amount of money. But as we go down now under operating expenses, we've got all these costs that we had to pay for out of our revenue. Selling and marketing, personnel. We talked about the importance of knowing your payroll costs, which ate up almost more than half of our revenue. Some other services, travel, etc. So it turned out that our operating expenses, were quite large compared to our revenue. And in fact, our net income came out to be only a couple $100,000. So again, this is this critical step of your revenues and then offset the expenses, and we're left with our total net income. So that's the P&L. So the next one here is our balance sheet. The balance sheet is a compilation of our assets minus our liabilities. That's sort of our net. If you think about your personal net worth, typically we've got our home. What's the home worth? Well, less the mortgage, that's our net worth. That's what the balance sheet is for a business. So it's your current assets minus your liabilities gives you your net worth. And the balance sheet will track year to year over time. We may acquire more assets and hopefully pay down our debts, which would improve our balance sheet, as we would say. So again, we have a year-end snapshot, but it will be a compilation of prior years up to the current and then going forward. Lenders are going to take a very close look at this to see, this will give a lender a very good sense of how healthy is your business. If your balance sheet's getting better year to year, you're making more money, and that's always a good sign for a growing business. And finally, this is our California Statement of Information. One final report that is actually legally required at the end of the year from the state of California. Very simple, just something you can fill out, in fact, online and submit, something that law firms or accountants can help with, but a lot of our clients will take care of that on their own.
Thank you, Jeff. And now we get into compliance, licensing, and regulation. So a lot of professionals and businesses in California are subject to licensing requirements by the state, such as doctors, lawyers, CPAs, as Jeff mentioned, architects, even notaries have to go through some training and so forth and certification process. Also, if you're an automotive repair, you're in cosmetology, you're a dental hygienist, you're a physical therapist, there are things you need to do in order to be qualified to perform those duties. And Jeff, there's also a lot to consider when it comes to compliance as an employer. So can you touch upon some of these required regulations?
Absolutely. So a lot of these fall under what's called OSHA. OSHA is a federal law. It stands for Occupational Safety and Health. And each state is required to have implementation of these laws. California is referred to as Cal OSHA. California has taken the approach of actually having stricter and broader requirements for businesses than are required at the federal level. The following is sort of a list of some of the more common requirements that are going to affect your business. But something really important I want to point out to everybody, OSHA applies to every business in the state of California. No matter how big or small you are required to adhere to the rules of Cal OSHA. Now, you can, if you have, I believe it's 10 workers or less, you can convey your adherence to these rules verbally to your employees or your workers. If you're more than 10 employees, you've got to have some sort of written format in order to notify workers of their rights under Cal OSHA. So for example, what's the minimum wage rules? Okay, that's a Cal OSHA requirement. You have to notify your employees and you have to stick to the rules. Discrimination notices, paid sick leave notice. Okay, there are paid sick leave rules, medical leave, pregnancy leave, workers' compensation. Over time, federal government and the state of California have added these various rights, employee rights, and employers under our system are required to notify employees of these rights and to make sure that those rights are not violated by the employer. So even if you're a small business, this is quite, it can appear to be quite a burden. There are services that Cal OSHA will supply, ways to notify your employees. They'll have summaries of the rules, but something absolutely you need to be aware of. From a legal perspective, this area of law is often called labor law or employment law. And there are attorneys who specialize in this area and will advise businesses on how to meet these rules so that you don't get in trouble, even inadvertently, for not adhering to them. So most businesses will tell you, hey, we will advise them. You don't have an employment attorney, I can introduce you to one. Again, try and get a consultation and just get a sense of what do I need to be doing here that I might not already know. So again, very important to be aware of these regulations, Natalie, just to make sure you're not doing something wrong.
And I think with more businesses turning to remote environments too, and how to notify employees who are working remotely versus going to an office where a lot of this information can be posted in the break room, or Jeff, maybe you could speak a little bit to that.
That's a great point. I think many of us who've been in the workforce, the break room or the kitchen, the coffee room, there'll be a bunch of posters or signs up, right? That's the Cal OSHA notification. But now a lot of folks have gone remote. How do we notify our workers? Again, Cal OSHA has services that will help you do this. But again, I think Natalie will get to the employee handbook in a moment, but here are just some additional rules under the federal law, federal regulations. And these are dealt with under EEOC, the Equal Employment Opportunity Commission. And here's some other federal ones: Fair Labor Standards, which implements the federal minimum wage, family and medical leave, and then again, OSHA for the federal level. So again, both federal and state rules that we need to be aware of.
Thank you, Jeff. And now to the employee handbook and why this is so important. I know also in getting some types of insurance, it's important to have this handbook
That's right.
available to your employees. So Jeff, can you speak to the employee handbook and the importance of having that in place?
Sure. So at the most general level, an employee handbook just sets forth the company's policies with respect to these federal and state requirements. So it's going to provide a structure for your existing employees. And typically you want to give it to new employees as well to make them aware what their rights are. That's our employer requirement. Now, technically, You don't have to have a handbook, but it's a really good way to have all these rules in one place to give them that notification that you are required to offer. So for the example, if we don't have that snack break room or kitchen to put these rights up on the wall and the posters, employee handbook can be a digital version. We can email them a PDF, and then, they've been notified. Now, federal employee handbook policies, they're the same across all 50 states. And this covers things like equal employment, anti-discrimination, you mentioned family medical leave, et cetera. Things that I think we would all be aware of. State employee rules, again, can be stricter and more broad, like in California. And there'll be additional rules. Here in California, for example, alcohol and drug rehab leave, business expense reimbursements, pregnancy leave, paid time off, things of that nature. I think the members can take a look, offline on their own. But again, in California, they're going to be broader and a little more burdensome than what's required at the federal level. Again, more reason for the employers and business owners to be aware of these issues. Having an employee handbook is great because it puts all this in one place. And there are, in fact, services available that can prepare an employee handbook for you.
And this is also valuable, Jeff, if there's a lawsuit, correct? If an employee files a lawsuit against the company, that there was a handbook.
Absolutely. That's a great point, Natalie. The reason for that is the company can say, we do in fact have a policy, for example, against discrimination or against sexual harassment. And in fact, that policy is in our handbook. Mm-hmm. And we provided that handbook and therefore notice of our policy to the employee. Mm-hmm. So that takes you at least partially through the process of saying, we did have a policy in place, we were doing our best to enforce it. That's right.
Mm-hmm. Thank you, Jeff. And now on to insurance. So very important for companies to know the types of insurance they should have. Now, this is going to vary depending on your company, but employee insurance, also known as EPLI, that includes coverage for the defense costs and damages related to various employment-related claims, including allegations of wrongful termination, discrimination, workplace harassment. There's also a workers' compensation, and that provides medical and wage benefits to people who are injured or become ill at work. There's general business liability insurance. This is a broader type of insurance policy which provides liability insurance for general business risks. There's also errors and omissions insurance. And this is kind of a specialized liability protection against losses that are not covered by traditional general liability insurance. So, for example, attorneys often have this insurance to cover malpractice, for example. Also very popular these days is cybersecurity insurance. This is a specialty insurance product. It's intended to protect businesses from internet-based risks and more generally from risks relating to information technology, infrastructure, and activities.
So Natalie, if you don't mind 1 minute going back to insurance, I just want to make a couple comments for the business owners here. EPLI, the employee insurance, if you are facing a claim for harassment or discrimination or something like that, the very first question the attorney is going to ask is, do you have EPLI? And if the answer is no, then you're in a lot of trouble, okay? So EPLI is really, really important. If you have employees, you need to find a good business insurance agent and inquire about EPLI if you don't have it. Errors and omissions, as you mentioned, it's a bit of a specialization, but for professionals like myself, attorneys, we actually absolutely have to have this. In fact, it's a requirement in order to practice to have error and omissions insurance. And the latest one I would mention, you pointed out cybersecurity. Just to give you and the members here a sense of how important cybersecurity insurance could be. Let's take a little example. Do you accept payments from your customers either online or through a digital service? For example, a digital credit card, the swiper that everyone uses. Or maybe you can send an invoice online and they fill out their credit card information and send it back to you. If that's the case, you need cybersecurity insurance. because there is a chance that someone could hack into that transaction, steal the private information and make off with it. And then someone's going to file a claim against your business. Not terribly expensive to get it, but just absolutely be aware of these different types of insurance.
Thank you, Jeff. Now on to legal forms and legal agreements.
So sort of I think this is one of the later slides, Natalie, perhaps one of the last slides.
Mhm.
I thought this was important to point out to folks. These are some of the most common agreements that you're going to see, legal agreements that you might see as a small business owner. These are things that most firms who specialize in small business services should be able to prepare for you. Some require some specialization and some might be a little more generally available. Let's just go through them quickly. An independent contractor agreement and an employment agreement. So we talked about the differences between an IC, an independent contractor, and an employee. You don't necessarily need an independent contract agreement, as we've seen, because that's not how it doesn't determine your status. But the IC agreement or the employment agreement will lay out the terms, how much they're going to get paid, the scope of work, what the expectations are, et cetera. So these can be very valuable to have, not very complicated. You can put together a 3 or 4 page agreement that will typically be very, very good. Commercial lease. So if you're a landlord and you're renting out an office space, for example, you're going to be very familiar with a commercial lease. But what if you're a business owner and you're going to be renting some space to work? Now you're a tenant, you're going to be signing a commercial lease. So you might want to be familiar with these terms. Hire an attorney or at least consult with one and look out for some of those traps for the unwary. Just to make sure you know what you're getting into. Engagement letters. If you're going to hire that accountant to help you out, they're going to ask you to sign an engagement letter. Well, what does that mean? It's going to lay out the scope of work, the terms of service, what you can expect from the accountant, and what you're going to pay them. Very similar for an attorney. Again, what's the scope of work? What's it going to cost, et cetera? Know your way around these documents and you can save yourself quite a bit of money. Business services agreement, just another word for a contract. Either one that you're going to be signing to hire someone to provide services, or if you're a service provider, you're going to get your clients to sign up for to get paid. Similar license agreement. I'm licensing some sort of intellectual property. Partnership and joint venture agreements will be if I'm taking on partners or I'm going into some business with someone else and we want to lay out the terms of that arrangement. I've seen a lot of business ventures based on a handshake and that they don't turn out so well because someone's view of their responsibilities might have been different from their partner's view. So while it might be more expensive to put all those terms down in writing, it's going to probably save you a lot of money in the future if there's ever a dispute. So again, just a nice summary here of the more common agreements that you might see, legal forms. Some of these, I would just add finally, Natalie, certainly so you can find these online. I would just caution that you're sort of taking your chances with online services. We would recommend finding someone who's a specialist or at least a business attorney who can help with these types of forms and give you advice, a little more specific advice.
Thank you so much, Jeff. That's so valuable. And I know we went through a lot today in very high level terms, but of course, there's more details that are involved and we're always here to help. And Jeff, I think you always offer that to the members of the credit union.
Okay, if there are no other questions, I'd like to thank you again for spending the time. I hope you found this as valuable as all the rest of us have. And I think you've gotten a good feel for the partnerships that we have and the expertise that we have here internally, as shown not just by Jeff and Natalie, but Howard's on the line and helps us with the retirement plans that we'll get into in much greater depth in our next presentation. So we'll look forward to seeing and hearing all of you again at the third session. And if there are, again, no last minute questions, I'll go ahead and say thank you again and have a great evening.
Thank you, everyone.
Thank you.